So we've covered a couple of the common areas of exposure you might find on your tax returns. Now we want to talk about the sort of areas of exposure we see on people's financial records. Now, the simplest thing that we find, and this is very common as well, is the simple use of spreadsheets in place of an actual accounting system. This creates exposure in a number of different ways. The first off just being that there's really no way to properly reconcile data that's been put into a spreadsheet. Unlike with something like QuickBooks where, we're going to go through the bank statement and make sure everything matches up. We don't have that luxury when we're dealing with a spreadsheet. So just by that design alone, the likelihood of human error making the numbers all wrong is very, very high with a spreadsheet. Furthermore, there's really no way to go into the spreadsheet and look at where the data is coming from. Yes, the data might have been entered from a bank statement, sure. But there's no way for us to look at a single transaction and trace it back to that particular statement. So just going through and making sure things match up and verifying the data, say before you file your tax return, is very challenging, and you're often stuck taking a shot in the dark. So that's the first area of exposure. The next area of exposure for those who do not have a spreadsheet and who are using a solution like QuickBooks is categorizing transactions incorrectly. And I'm not necessarily talking about putting an expense down under the wrong category, although that can sometimes have ramifications. The biggest exposure I see when it comes to transactions being categorized wrong is people putting down something like, say, loan payments as an expense, especially with their auto loans. Payments to credit cards, loans, and other types of liabilities should not be classified as an expense in your QuickBooks. It's categorically incorrect. So a common area of exposure is for somebody to put all those payments down and those payments to be lumped in with their auto expense on top of potential depreciation. Now you're double stacking your transactions. So in that instance, you're creating a lot of exposure because you're deducting something that should not be deducted. And last but not least, people who are using QuickBooks will commonly try to tie their personal bank accounts in addition to their business bank accounts into their QuickBooks file. Now, you should definitely have separate business bank accounts, but only those business bank accounts should be on your QuickBooks. If you're trying to put personal bank accounts on there to get a few transactions in, should you get those transactions in if you make a mistake and put something business related on a personal card? Yes, and there's ways we do that properly and within a certain time frame. But putting your personal bank accounts onto your QuickBooks means, well, now we have to reconcile these personal accounts into the books. In order to do that, you have to bring in every transaction and then categorize that in a way that's going to make sense. And doing that's going to create a lot of frustration and a lot of headache for you or for your bookkeeper. So to tie this video off, when it comes to bookkeepers, the thing to bear in mind is that second example I gave of transactions being put wrong, the most common way I see this done is not necessarily by the real estate agent themselves, but by their bookkeeper. Being a bookkeeper doesn't necessarily mean somebody knows the difference between a transaction that should be posted to an expense account and a transaction that should be posted to a liability account. So when you're going to bring on a bookkeeper for your business, which can be very valuable assets when you run a real estate business of any kind, it's important to remember that you are the sole person responsible for your financial records and your tax returns. So even if you have a bookkeeper working on it, you should be checking it for integrity yourself. And if you just watched this video, you may want to go back and take a look and see if some of the things I mentioned in this video apply to your situation so you can be more aware of any exposure you might have. Hope this was helpful. In our next video, we're going to start talking about some of the tax strategies we use to save people money and get past all of the scary audit stuff. So I'll see you in the next video. See you in a minute.